Good evening, everybody. Spill any coffee out there? Thought I'd say something 5 seconds early without typing. Hi, guys. We all set out there? How's the sound? Boy, how long did you have that ready to go, Gary? Paul, based on the title of this talk, I assume you're requesting me to be here since dumb comments flow out of me frequently. Yeah, sorry for the title, but you know how I am. I do this all, of course, only in the vein of trying to help everybody, and I think you all know that. But I think it's important, well, the opening slide here says exactly why I'm doing this, because I think it's important to know what a dumb question is, and I think that helps you to learn. As a matter of fact, I normally just say on this first slide here, just, this is what you're sending your email, read it over. But I just want to focus on that one little comment in there that says, one of the concepts in teaching that began early on, and that I feel is critical for people's success, is to remove any wrong ways of thinking in whatever field of endeavor you are learning. Yes, there are different ways to do things right. I had somebody one time criticize me for saying, oh, you think your way is the only way to make money. And I really chewed the guy out. Because no, I say the opposite. I say there are a lot of ways to money, but you know what there are? There are also wrong things to do that will prevent you from making money. And you may not realize it. I've been doing this forever. I've been teaching people forever. And I've been through it myself long ago. I've helped people through it. And there are things that you may do that you don't even know are wrong that'll have you stuck in a rut for months or years. And that's a terrible thing to be. Anybody ever felt that way? Like you're just kind of stuck in a rut? And it's very likely because you're just hooked onto something that's never going to work. And I want to at least identify that for you, so that at least, whether you go on to get an education or to learn from me or have me as your mentor or not, at least maybe you can say, hey, he's right. This is wrong what I'm doing. And one of these slides says, there's nothing wrong, just moving on. If you don't get this and you don't like it and it's not for you, move on. But, don't waste lots of time refusing to learn something and then also not learning to do it right? That's being stuck in the middle in a really bad way. Trading has a little bit of that bad thing that is kind of a little addicting, like gambling or something, because you can make money or whatever very quickly. You can't think of it that way, because trading is not gambling. It's a much different thing, because you have a odds and an edge when you know what you're doing, and you control the money and you manage it. And it's like a business. There's no more gambling than there is to a business. I mean, you could say any business is gambling too. If you're going to sell pillowcases online, that's a gamble, isn't it? Maybe nobody's going to buy your pillowcases. You got a whole warehouse of pillowcases, and you lose a lot of money. Anything's a gamble. Any business has to be managed properly. But the last presentation I did was almost kind of the opposite. I didn't mean to do that, but it said, a list of great comments, whatever it was, positive things you need to know. And in going through that, of course, I began to realize, hey, there's a lot of comments other people say that are going to hinder their careers, are going to stop them. And the list is huge. I could probably sit here for 3 hours and go over them if you wanted me to list every one. But I tried to get some of the key ones, and they are going to have a little variety in that most of these are going to be technically oriented, so this shouldn't be totally boring. This is not a big look at all these trades type of event. It's just simply some technical concepts I will bring out that are right or wrong. And the first one actually is starting off with more of a theoretical and a bigger picture one. So let's move on to that first real slide. This is some of the dumbest comments, number 1. And this one says here it's a big picture comment, meaning this isn't, technically per se, it's not something on a chart. The reason a lot of times I come up with the topics I do, and I think this is a very good thing for all of you listening to me, one of the reasons I come up with the topics that I do is based on demand, if you will. I don't mean that you write me and demand a topic, because you don't know you are. But when I talk to people by email or sometimes on the phone, whether they be just free members sometimes or whether they be subscribers, and I hear their rationale on stuff, and I think, I correct them, but I think, well, how many people think like this? And then I go back to, did I think like that? And that's where I come up with some of these topics. And that's why this first one here, some of you may look at this and go, well, this is a really kind of a dumb way to start this off, because I know that. You know how many people don't know this? You know how many times I hear this? I'm not doing well trading stocks, so I think I'll try options, or I'll try crypto, or I'll try Forex, or I'll try futures. I'm not going to answer any comments because I don't want to embarrass anybody, but do you realize how purely foolish that comment is? It's exactly the same as saying, I'm not doing well playing baseball. I'm just too uncoordinated to hit the ball. So I think I'll try tennis. It's the same comment. People, for some reason, in trading don't seem to see that. Or I got fired from my job as an accountant because my degree was in chemistry. So I think I'll apply for a job as an engineer. It's the same thing, right? You feel it is about what you are trading and has nothing to do with your skill, but nothing could be further from the truth. As a matter of fact, what you trade is not relevant in terms of your ability to make money. Does everybody see this concept? I mean, it's just something you should never, ever do. I don't care what you pick. What you pick, whether you pick to do futures because you only have $5,000 and that's all you can put into the market, or whether you pick Forex because you want to get up at 4 in the morning, you pick the entity you want to trade, maybe based on the time of day you want to trade or things like leverage, but you don't pick a second one because you can't do the first one. If you can't do the first one, you can't do the second one. It's all the same. Don't let anybody ever tell you that for some reason, oh yeah, well stocks are tough, why don't you try Forex or why don't you try crypto? Any one is fine because all of these involve technical trading. They all involve a chart. Here's a chart. Can you make money from that? That's a real question. Can you make money from that? Can a reasonably skilled trader make money from that chart? What do you think? Can a reasonably skilled trader make money from that chart? Yeah, boy, right? And this is the difference between how so many people look at trading and how, well, at least I do, I'm sure other people do as well, but not the majority. And that is that I look for charts like this chart. And you may say, oh yeah, well gee, that's a great chart. Well, okay, go look for that chart. That's why I like stocks personally, as you know, because I can go look for this chart, right? And you may say, oh gee, wow, well okay, well you picked one chart out of your reservoir of charts from the last 10 years. No, this is from today. This is a trade from today. I'll show you in a second. But before I even get to that, would you know, Roy, would you know if this was a yearly chart of crypto or a 5-minute chart of Qualcomm or a daily chart of the futures? Would you even know what this is? Anyone? Would you know? There's no markings off to the right. There's nothing at the bottom. There is a dotted line, so it's either the beginning of a year, the beginning of the day, the beginning of a month, something. Right, that's the whole point. Exactly, Mark. It doesn't matter at all. Now, here's the second question. It's kind of a trick question. Could you make money from that chart? Technically, the answer is no, because I need to see 4 time frames. This is one time frame, and that's a very pretty chart. And I'd almost be willing to take that well, not really. But you would need to see the other time frames. But what we need to see are a couple other charts to make this a perfect chart. But what I don't need to know is even what it is. Now, I want to know what time frame it is in terms of for my personal preferences, right? Am I swing trading? Do I have to go to work during the day? I need a daily chart. Am I day trading? Do I want to be done in an hour? Maybe I need a 1-minute chart, whatever it is. But those are preferences you have. But in terms of making money, it's all the same. It does not matter if this is Forex. It does not matter if it's a 5-minute chart or a daily chart. Okay? You don't change the moving averages when you get to Forex. You don't change them when you go to equities. They don't even matter what they are. And also what's even more important is you may say, well, gee, I need to know what it is because I need to look up the news on Forex or crypto or see what's going on. No, you don't. You don't. You don't. It's one of the other biggest mistakes you can make is that the news will only cloud your judgment. The news, you know where the news is? The news is here. It's already here. It's here, it's here, it's here, it's here. This thing may have a knee-jerk reaction to the news, but a bigger picture is digesting news going days, weeks, months forward. We don't know how far. That's why we read charts. That was Zim from today's trading day. My only long, so no other comment. It was a great trade. What's the point of this number one dumb comment of the world's dumbest comments? It should be somewhat common sense, but so many people that go on failing entity after entity because they never address the problem. Please don't do that. I mean, if it's one other service I can provide, it's maybe, to get you off the wrong path, or maybe even in some cases just to have you to stop if you're not making money. If you've been doing this for a while and you're not making progress, you have to stop. You can't just keep spinning your wheels. The problem is that they don't know what they're doing on any chart. It's all about reading a chart for any of these things. You're not going to take a shortcut. Listen to the news, listen to fundamentals. It's all about knowing a chart. Trading is not for everyone, but either learn how to do it or move on to something else. And a little comment here for me, it's only meant to help, even if it means making the decision to try something else. Okay? Questions, comments? By the way, before I move on, yes, correct, exactly. I mean, I've said that in other presentations, right? That's something I hit on sometimes. People, whenever I talk about options, is the first thing I say is people, they want to go trade options in a vacuum, and you can't. There is no options strategy that exists where you would not benefit from understanding the underlying asset. You're absolutely right. Options are just, and since you asked the question, I'm sure you know this, Craig, but options are simply a way to skew the reward to risk on the underlying stock. That's all it is. It's just a different way to manage the money in terms of what you might make versus what you might lose, the chances of making it versus the chances of losing it. And that's all it is. I want to make one other comment here because it says a couple times on here, if this isn't for you, just get off the fence. But I do want to point out something that I always have to apologize for when I say it because it sounds mean in a way, but it's such a punch in the nose truth that the mental capacity, the skill, the understanding, the math needed to trade is that of a fifth grader. And I don't mean that to be insulting, like I said, it's just the truth. And none of you can disagree with me. I don't have to ask you. There's nothing you can disagree with me on. And that begs the question then, why do we make it so hard? What is so hard about it when the mental skill is that of a fifth grader? Next one. Maybe I should give you the answer to that question. The answer is because people don't understand that the whole world of trading, all this, is boiled down to what's on a chart. That is the synthesis. You've heard me, I'm not going to go into here again because I do it in the Introduction to Mastering Technical Analysis class and other places, but it is the synthesis of everything out there. It is. You can't just react to news events. All right. Did that say, there it is, a technical comment now coming up. Here we go. So we're going to get to some technical things now, and these are some of the dumbest technical comments that I hear. So let me ask you a question here. Is support on this chart 312.82 or 312.57? There's 312.82, 312.57. And there's such a clear, obvious answer. You will be one of the dumb ones if you give the wrong answer. Which is the support area? The bottom of that red bar, 312.57, or the bottom of the green bar, 312.82? Any more comments? I would say both, Dave, is exactly the wrong answer. Well, expensive or not expensive, it doesn't matter. It's a visual on the chart. There it is, right? You're right. It's extremely small difference. In this case, it's 30 cents, which may be a lot if you had a $4 stock, but for this, it's virtually nothing, right? Can somebody tell me, like, if I'm saying that it's neither one of those, where is the support area? Give me a rough date. Can you give me a rough date where really the support area is? I'm going to have to get my I need green, and we need a big, wide pencil. Yeah, very good, Market Pro. Do you guys realize that the support for this, and by the way, this is the QQQ last week, in case you're wondering. Just, going into the end of April, a couple of weeks back. This is, that's a little too fat, isn't it? Let's not go crazy there. This is the support that runs the market. Anybody know what kind of support that's called? It's not really a February high. It's that whole consolidation area. Yeah, it's called minor support. And that's what runs the market. And if you think that's support right there, listen carefully. If you thought that was support right there, and you broke it here by 30 cents, if that's the language you use, you will never make money. Never. Because, number one, you didn't break anything. Somebody's comment up above is correct. It's not a glass plate. It's not like you break some to the penny. It's always the reaction to that alleged breakage that you want to monitor. That's what tells you if you're broken or not. And in this case, you really can't break it because that is not even the relevant support area. It's this over here that is support. So when you fall into this, it's going to rebound out very likely. It's been a tricky market, but that's very likely what's going to happen. If you, I don't have the rest of the chart, but if you go to the QQQ, and look at today, you'll see that shortly after this, another bar dipped down into here, minor support, and boom, shot right out of it. Almost as if you dropped it on a mattress. Do I have more comments on that? Number 2. And for a lot of this, I don't expect a whole lot of commentary necessarily. I'm kind of hoping, the people that are answering usually kind of know, and the ones sitting there are kind of maybe putting answers in their head. And then I say something that really kind of punches you in the nose. It's kind of the whole point, is to be, wow, that makes no sense to me. Or maybe even, wow, Paul's an idiot. I mean, that might be a good thing for you to be thinking right now, because you may be so far off in how you're thinking when you look at charts. We're going to continue, though, with some other support resistance concepts here. Look to the left is a meaningless comment. I mean, and again, why am I bringing this up? Because when I talk to people and I ask them why they did something, well, I look to the left and there's resistance. Looking to the left is a meaningless comment. Do you guys all understand that? It's a meaningless comment. I mean, yes, everything is to the left on the chart. I understand that. But just because there's something there doesn't mean it's resistance or support. And just because there's nothing there doesn't mean that there's not. Example, a point. I'd like you guys to give this a rating just for fun. On a scale of 10 is huge resistance. 0 is nada. For those of you that are not as fluent in Spanish as I am, that means nothing. We're running right up to here, and we're hitting this double top. Did you catch that language, everybody? Double top high. How much resistance is here? Are we going to get through that? In other words, are we going to get through that? If you think there's a lot of resistance and that's it, give me a 10. If you think it's pretty good resistance, but who knows, 987. 5, you're just kind of neutral. I don't know. While you're typing your answers, I have to tell you, this is just a clear-cut answer in my book. This is not like even open to, a lot of things are open to some debate. This is open to debate within 1 or 2 points of what I'm going to tell you. Yeah, see, hard rejection with wick, Mike. I don't like that answer at all. Is that wick bearish? That's an hourly chart, right? Let me ask you a question, Mike. Let's say the 5-minute chart. You're gonna love this. Let's say the 5-minute chart for this candle here, right? Let's say the 5-minute chart, does this. Bear with me. Let's say the 5-minute chart does this, right? Very bullish, right? But what if, Mike, we just said, hey, the hour's up. I got to start a new candle. Well, why? Why do you have to start a new candle? Well, I don't know. It's 10:30. I got to start a new candle. Do you see how, Mike, that a 5-minute or 15-minute uptrend closed at the wrong moment leaves you with a wick, topping tail, whatever you want to call it? Topping tails are not bearish. There's another one for you. I should have put that in here, right? Any good seminar students here? I don't see a single seminar student here. Well, it doesn't matter what chart it is, Mike. It really doesn't matter. The point is, any pullback, right? Any pullback that is captured at the wrong moment is going to show you a tail at some moment in time, right? But this resistance here is was 0 to 2. Nobody even came close to that. There is nothing there really. There's virtually nothing there. Resistance, and again, I can't go through the whole thing we go through in class, but in class I teach, and I've never seen this taught anywhere. This is out of my head, because one of the biggest issues for people is always what is support versus resistance. We learn in class a 4-point way to diagnose whether there's support or resistance there, right? Yeah, that's a small part of it, Art, yeah. And actually it's 2 guys. Yeah, this is 3 guys in this case, yeah. But think about this, guys. Think about this question a minute, because it's probably something you never even entertained. When you talk about if there's resistance there, i.e., can we get through this area is how I phrased it. Isn't it not only what's here, but isn't it also a balancing act between how powerful the move is? I mean, if you have a powerful move into so-so stuff, aren't you going to get through it? Resistance is always a balancing act, right, of the sellers that you see allegedly versus the buyers somewhere, right? And if the chart is dominated with buyers and the sellers are gone, I mean, why are there sellers here? You're saying there's resistance, what does that mean? Well, the answer would be because there's sellers. Well, why are there sellers? That's what you ask everywhere. Why are there sellers there? No, it's not guaranteed. Nothing's guaranteed, right? But what you have to do is analyze every chart pattern, every chart pattern you're interested in, and decide what's going to happen. This to me is there's just a nothing here type of thing. We're in a very strong uptrend. You came up here and you had a very extended pattern. That's number one. So it was extended, so you wouldn't expect any retest to get bought. Any selling that was here was soaked up in this red bar. And then after consolidating down here, we break above this whole area. So you're like driving a Mack truck down the road into a few bales of hay. You have to be able to see that. It's very clear. This is not like a close call chart. This is a very clear chart. That's AAL in the last couple days, 17th. It was today. It was today. I didn't even know it was today. There you go. It's not hard to find examples of this stuff. It's all over. I just went through a few charts and found some of these. So the answer is none, nil, zero, zilch, nada, nunca. I always say nein for German, but it's actually keiner. I didn't know that. I had to look it up. Nein is just no. I didn't know that. Well, I guess it's true in Spanish, though, too, right? Nada is nothing. Nunca. What's the difference between nunca and nada? Oh, nada is no one, right? Yeah, never mind. Okay. Here's another one for you. The old look to the left. Here we gap down to here, right? And we have this void above. We gap down to here. And the next day we break above that high, right? We look to the left, and guess what? There's nothing there. Not for a long ways, right? There's nothing here. Some point there will be, but there's nothing there. So same thing. Give me a scale of 0 to 10, with 0 being very little resistance and 10 being a lot of resistance. How good a chance do you have of filling this gap? In other words, if you think we're going to fill that gap, there's no resistance there, type of 0, no resistance. If you think there's a lot of resistance there, type of 10. Go ahead, go. 3, 2, 1, go. I made everybody not type from the first. Correct answer is 10. Correct answer is 10. Because there is no greater resistance area than what you're looking at right there. Where will the resistance come? We can't always tell that. We're not that precise. And here's the reason why. I mean, I try to teach people when I teach them is learn the language of charts, right? Not cookie cutter comments, not stupid comments people say, but just think about what's going on here for a minute, right? There was a big support area here, right? For a long time, right? Big base going on, big support area. This support area held for how long? For 4 months, right? Would it be reasonable to assume there are a lot of longer term traders that are long either near that area or have their stop in that area? Would you all agree with that? Just from the school of common sense, right? I don't even think you have to ask the question, right? What happens when all of these traders gap down below their stop? They're all in a lot of pain, right? And they all want to get out. So sometimes they sell it right the first day. It depends on the dynamics because there's another balancing act, and that is who may want to buy this for some reason. But as you start to run up into this area, you're going to get sell, 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 sell. So here's a case where you look like you have a void, whatever that means, but it's not a tradable void, whatever that means, because it's the highest resistance area in trading, and yet you don't even see it. And this is, guys, this is basic stuff, and that's why this is in the comments, some of them. So I just want to alert you to some of this stuff. Somebody trades a big gap down, a very bearish gap down, and they're playing it long, saying, oh, well, it's going to fill the gap. There's no such thing as filling the gap. That's not a thing. Resistance is due to lines on a chart and due to market planning. Absolutely, Chris. Absolutely. Good additional comments. The only reason I drew these lines is because this was the support area, right? All I'm saying is people had tons of stops placed there. And whether they had stops placed there or not doesn't matter. Anybody long up in here isn't in a lot of trouble down here. You're absolutely right. And you have to see this in chart patterns. Learning the language of charts means understanding that any area of a chart that you try to focus on or able to understand somewhat who has to buy the stock and who wants to buy the stock. Who has to sell the stock and who wants to sell the stock. Right? That's the balancing act. Here, there are a ton of people that have to sell the stock. Not want to, they have to sell the stock. And that gives you an edge because even if the rest balances out, we know off to the side here, there's this big pool of people that have to sell at some point, right? I'm just waiting for comments here. And then we'll move on to number 3. Rest, oh, you guys are going to argue about some of the rest of these. It gap down, wooden, Dostoevsky. Well, first of all, Mike, generally, I mean, most Most, well, it depends what you use. I mean, a lot of stops don't carry overnight. You can use a stop that does carry overnight, but not all people would have that. And yes, this is for some people who have their stops or put a stop in the morning, that would cause some selling. Take a look at Tyson Chicken. Take a look at PayPal. I'm not going to bring the charts up, but these are things where those stops kicked in and created an immediate snowball effect, right? Now here, for whatever reason, the stock, there was enough buying. Picture your long and you're in pain that morning, right? If it starts falling, right, it makes a snowball effect because people say, I can't take it. They sell, the selling drops it, more and more people can't take it, keep dropping. If for some reason it got buying, and hard to say why. Maybe some people shorted in here. Maybe there's some other reason somebody's buying. Maybe there's something that, charts are being made all the time, and maybe there's a chart being made and that some fund decided to buy some shares at 850. We don't know why they decided to, no reason. So it could have got bought a little bit. If it got bought, if you're in this, maybe you're saying, hey, it made that low in 5 minutes. That's going to be my stop now, that 5-minute low, right? So maybe people are hanging on to hope that maybe that day's low will hold because it's going to come snapping back, right? But when it doesn't come snapping back, guess what? It drops 3-4 days, right? That's what happens. Could that buying at the bottom be market biased? No, Chris, that doesn't happen. That's not a thing. And don't even talk like that. Nobody's manipulating the market like that. You think market makers are sitting around buying stocks at a loss in order to manage deltas? No. That's not. I've trained 2 market makers. Trust me, they're trying to keep their head above water, not manage deltas. Just a no. No, it doesn't work that way. You look at a stock that gaps not like that. There's millions of shares being tossed around. People have to get in, have to get out. There's nobody manipulating what's going on there. No. Waiting for more questions here. Boy, we're going to argue about these next ones. We're going to get ready to battle because these next ones I have no leeway on whatsoever. John, they are out to ruin yours. There is an exception. Yes, I saw some emails between some market makers, and they said that John W. Yeah, he irritates me. We're going to get him at all costs, even if we lose money. We're going to get him. Yeah. Well, it's just you though. Nobody else has that excuse. It's only you. All right. Now, okay, believe me, market makers are not out to get anybody. But let me tell you something else that is true, right? If the whole world, right, if the whole world hangs their stop in an obvious area, guess what? That might get run. I mean, that's just part of the game. And you're kind of dumb if you hang your stop on a nationally advertised area where people hang stops. That's what shakeouts are. When everybody gets their stop run, then it snaps right back. And people say, blah, 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 but you shouldn't be doing that. It's just what happens. All right, next. All right, guys. Exponential or simple moving averages? Exponential or simple? E or S? Don't give the wrong answer or you're going to be accused of being dumb. Final answer, it completely doesn't matter. The purpose for which we use moving averages, it does not matter. Moving averages are not strategies. They are not entries. You don't buy moving averages. They're not support. Moving average crossovers are completely meaningless and don't even try to tell me anything to the contrary. You'll be very disappointed if you try any system that utilizes moving averages. Now, I keep moving averages on the chart, so don't get me wrong. I keep 2 or 3, or well, sometimes 0, but I do utilize them, but it's for a very, very specific purpose. And that is just a very general gauge to help me understand the trend. It's a quasi-fixed point on the chart that lets me understand the chart no matter how it is sized, skewed, or scaled. So a reason to use simple is, number one, why not? But the main reason is if you want any benefit at all to some of these things, it would be only for the purpose. Remember, you're never going to make money, one versus the other because none of them are strategies, none of them are entries or exits. But there's a thing called self-fulfilling prophecy, and that is if you see what other traders see, you may see self-fulfilling prophecy. And that, of course, means when everybody thinks something's going to happen, The dum-dums will start to make it happen, and if self-fulfilling prophecy lines up with a real technical concept, it may be the spark that ignites it, so it's nice to see. But when self-fulfilling prophecy is happening in the middle of nowhere, and it's just the dum-dums doing it, that'll be a good opportunity, possibly, to enter in the other direction. Did that make sense, or do you want me to repeat that? I don't really want to draw anything, but did that make sense, or do you want me to repeat that? The reason that you may want to keep self-fulfilling prophecy. And self-fulfilling prophecy means that you would have the charts up that most people have up. Now, I don't know what everybody has up. Everybody uses different stuff, actually. But there's some stuff that's kind of common, 20 simple moving average, 200 simple moving average. Most people are kind of looking at 5, 15, 30, 60-minute charts, daily chart, weekly charts, But for your own trading, if a trader said to me, one of my students said to me, Paul, I don't want to use moving averages, I'd be fine with it. It's not required. I personally like them on there, so I'd be perfectly fine. If they said to me, hey, I want to use the 3 and the 7 and the 29, that's fine. You know what? Just keep them on there all the time so that you get a sense for what your chart looks like. Because what you need to know is your chart should be personal to you. You should never be able to look at somebody else's chart and be able to figure it out. It doesn't matter really how you set up your charts, but you should be able to set up your charts in a way that you like them, and then you continue to look at the same charts, skewed the same way, the same length by height. There is, and while we're talking about this, there is a great article you should read. It actually is a prior event I did, but instead of recording it, I did record it, but I put it out as a article. It was a test, and it talks about some of the stuff I'm talking about how you can tremendously skew your opinion of a stock by how you have your charts set. And that's very wrong. You need to be aware of that. So let me send that out to you here, because it actually would be like a whole additional addendum to the things we're talking about right now. Looking for it's called a test or something. Test your knowledge. Here it is. This should take you right to the spot on the DTS free stuff page where you can view that later if you want to. So simple exponential, it doesn't matter. If you are attempting to use shortcut Mickey Mouse things in technical analysis when moving averages cross this or that, it doesn't work. It's period. I don't need to have a discussion with you. It doesn't. And if you want to send me what you're using because you think it works, feel free. And you'll send me some examples of trades that you felt it worked for. And then I, of course, for every one you find that it worked, I could find 10 that it didn't work. But more important from a statistical basis, I would take the first 20 symbols on my screen and apply your technique and see if there's any value to it. And the answer will be no, there is no value to it. It's not that simple. We get our odds from understanding the crossroads of different time frames coming together and monitoring the battle between the bulls and the bears across those time frames and finding that moment in time where everything's going to ignite, or likely to ignite. We never know for sure. It doesn't come from something like when the 20 crosses the 40. It's ridiculous to think that if you just use common sense. Feel free to send me anything that you want if you want to discuss that. What moving averages should I use on Forex futures? It says add to that. So I already started to discuss this. They're obviously, it just burns me up when I see like an email or something and talks about trading Forex, and so got to learn Forex, and we use different moving averages and different time frames. It's all crap. It's a chart. It doesn't matter. And since you don't even need moving averages technically, and it doesn't matter what they are, how can you say what they should be for Forex or futures if we don't even care what they are for stocks? Time frames too. You want to use a 330. There are certain time frames some people like for whatever reason. I don't care. Use them. You won't have the self-fulfilling prophecy benefit, but I don't think that's a big deal. I think Fibonacci, right, uses certain time frames. Like I made up 31339, something like that. Somebody sent it to me, which I don't know. And ready for this? Here's another one for you. Oh yeah, should I use the 40 or the 50? It's another big debate. I have the 40 on my charts, and people say, oh, why don't you use the 50? I don't care. It's like half-half. Use the 50. Doesn't matter. Here's another one. For those, what are the proper numbers to use with a MACD? Whenever you use a technical indicator, I don't know if you knew this or not, but you have to program in all the numbers you want. What's the length of the moving average, the time backwards, all this different stuff, right? So what are the proper numbers to use? Well, if you ask that question, you're falling into my category of some of the dumbest questions. Why? Yeah, why is that the dumb question to want to know what numbers you should use? Well, because if you want to know what numbers to use on the MACD, maybe you'd want to know what numbers to use on some of these. And by the way, this is just a fraction of the 400 technical indicators that are out there. If you're new and you're feeling very discouraged because you're now trying to use technical indicators, now you heard there's 400 technical indicators, and you're thinking, boy, I guess the force index that I'm using maybe doesn't mean a whole lot. You're absolutely right. It doesn't. It's all just garbage. So asking what numbers, trying to figure which of these work, it's all just garbage. Thanks, Mike. By the way, everybody gets one guess, your first guess only. Your first guess only. One guess. Take your time. No, it's not a number, Art. On that list of technical indicators, one of them is made up. Seriously, free month in the trading room for anybody, anyone, even a trading room member who guesses what it is. You got to type enough of the word that I know what you're saying. Free month in the trading room as soon as I see. And don't just, what's OBR? What's OBR, Art? Wow, you got it. That's it. And well, you're just a second ahead of Mark too. Yeah, no. Now, of course, what's funny about this is, right, I don't know how you knew that, Art. It's the only one you don't use. Because you look at some of these others, right, how would you know? That's what I thought was so funny about this. I made up ostrich breakneck range. I made that up. But look at the others. I mean, is anything else there? Is anything else there any less crazy? I mean, obviously some of those you knew. Some of them you knew. But I thought some of them were pretty funny in there. Ease of movement. I thought somebody would pick ease of movement. That's a technical indicator, ease of movement. Art knows everything, yeah. All right, Art, you email me and claim your prize, all right? You know my email. How did he know that? That was quick. All right, so we're on slide 20. All right, next one. World's dumbest comments on management, a management comment. You can't go broke taking a profit. You've heard me discuss this before probably, so I'm not going to bore you with the details of this. But what I will do is refer you to a prior presentation that deals with this and other topics about management. This exact topic is discussed in there. If you never heard me talk about it, there is a direct link to it on the Free Stuff Archive page, right? Yeah, nice win today. Hey, I had one nice trade too, you know. So tips on management, check that out. Just a quick summary for it. To me, this is one of the most deadly phrases in trading because it basically allows traders to break their trading plan. You're ready to trade, everybody's nervous, it's up, it starts to give back profit. You immediately don't want to give back any profit, so instead of going for the target you're supposed to go for, you immediately say, well, you can't go broke taking a profit, right, Mike? I'll just get out here. I'll scalp it out, right? And no, don't misunderstand me. I have nothing against a scalp trading style. I'm all for that. I mean, it's perfectly fine if that's how you're managing your whole trade and that's what you want to do, if that was your goal. What I'm against is having to reach a 40-cent target or a $4 target, and a quarter of the way there, you just take it off the table because you start to back up. Well, you now have interjected a way to manage that does not agree with your management plan, and you will never make money. You'll be, at best, in break-evensville for the rest of your career. Number 5, use the VIX to day trade as it will go lower when the market goes higher. Again, perhaps one of the dumbest comments I ever hear, and yet people get all wrapped up in the VIX. The VIX is one of those cool kid terms, right? Like when you sit around the cool kids table, the cool kids talk about the VIX. The VIX has a purpose. I have some articles out there, long-term, the VIX helped me find a top or a bottom. The purpose of the VIX, though, is almost exactly reverse of what most people think it is. The market goes up, the VIX goes down, in exact mirror image of each other. There is no benefit to saying, oh, look, just trade the VIX. If you see the VIX, you can do the opposite and trade the market. Well, how do you trade the VIX then? I mean, they're just doing exactly the mirror image opposite. You can't do that. And it also, the dumb comment I hear a lot is, oh, this move higher is being confirmed because the VIX went lower. No, No, that's what's supposed to happen. When what is supposed to happen happens, you learn nothing. Think about this a minute, everybody. Good news comes out and the stock goes up. I didn't learn anything. Good news, stock went up. What do you think is going to happen? Bad news came out, the stock went down. I didn't learn anything. The stock opened $3 lower. I don't know if it's going lower, going higher. I don't know. But what about when bad news comes out and the stock doesn't go lower? Wait a minute. I learned something. Something's going on here. Same thing with the VIX. You know how the biggest use for the VIX, and I'm just going to say this once because it may not make sense to a lot of you. The biggest use for the VIX is when the market drops and the VIX does not go higher. That's your indication that we're probably going lower to the extent you want to use it, but it has to be used pretty much on a daily chart only or higher. And you just, the concept of saying trade the VIX in reverse is, you might as well just say, hey, you want to trade the VIX? Just trade the market in reverse and you'll be all set. Just trade the SPY in reverse and you can trade the VIX. Dumb comment. That is discussed along with a lot of other things in a great presentation. One I may have to, at some point in the future, after 6 years of having virtually all new presentations every second or third week, I may have to start, taking some repeats from the archives and just freshen them up and redo some of these, because this was a great one, confirming what. One of my favorites, and it's from a while back. I've never redone anything like it, but that is a great one to watch if you never watch it. At least from what I remember, it was a great one. A curious question. Okay, so here we have one more. This was supposed to say a technical question, isn't it? Yeah. This is another technical question. Technical question. We come down to land right here, right? And I ask you the same type of thing. 10, there's a lot of support. 0, there's no support. How much support credit would you give for support from that gray line? In other words, from this double bottom low over here. How much support is that worth in your mind to take that trade long on a scale of 1 to 10? 10, that's a great support area. I would lop it up. 0, there's no support there. It's a meaningless area. Go ahead. I'm not going to count you down. Go ahead, go. To make it clear, let me say real support. Let me say real support. Because I guess anything that somebody would look at and looks interesting, somebody might call self-fulfilling prophecy. But how much real support is there? Isn't it interesting how the answers are kind of just, flip-flop back and forth? In this one, like everything I try and do, I'll prove it to you. It's 0. There's 0 real support there. And the reason is because this area here, this area here was cleaned through in both directions, to the downside by 1,000,000 miles and to the upside by 1,000,000 miles. So when we come back to here, who has to buy that area? In other words, who was short or who was long that has to buy that area? Well, nobody has to buy that. Who was short that has to buy that area? If you were short, you made $1 bazillion, right? You're happy as a clam. If you didn't for some reason, you would have, somewhere you would have stopped up way up here, right? Yeah, it's that trick question. So there's a little tip, and again, this is a very small part of understanding support and resistance, a very minor little thing. But once you go through an area in both directions, everything to the left of it is meaningless. It doesn't matter what happened over here. It's all traded through and erased. So when you're up here, the meaningful areas are minor support, and the prior low is an area. It's not really support in that case, the way that's set up. But they're focal areas at least. This doesn't exist. And again, this is just this is in the category of basic stuff, so basic that I'm putting it as, some of the dumb questions that I get, because people will do that. They'll say, hey, I bought that area, and it's often on a daily chart, and it's an area from way back that's been traded through a couple times. It's like, well, there's nothing to buy there, right? And did I give you the confirming what address? Yeah, I did. I think I did. Okay. Any questions on that? Anybody want to add a dumb question of themselves? I don't mean like ask a dumb question. I mean, does anyone want to add something that you feel has been something you learned in the past that was a dumb thing not to do, to overlook, to not overlook? Anyone? Any questions on stuff we went over? I'm funny. I actually, prior events, I always think I'm coming up short, and I go past sometimes. And this one here, I thought I had way too much material, and so I shortened those last couple, and we ended up at my last slide actually. So if you have any questions, let me know. When the time is right for you, I mean, obviously you want to learn more about this stuff. This is just nuanced, superficial stuff I'm going over. If you want to really learn someday, I would suggest that you look into the DTS seminar program at some point. You can start at any time because there's the home study. So you can start any time that you want to. And I even suggest people start before the live classes to get a chance to run through the home study so you're better prepared for the first live class and you can ask a lot of questions. Have you ever said any dumb? Gary, I say dumb comments on almost an hourly basis. I'm not sure I ever regret. I don't know. Why did I say something I should regret? Of course not, Mark. I would never say your name or refer to that email you sent me a week ago from which almost all of these conversational topics came up today in this presentation. Well, Mike, the live seminars are about every 6 weeks or so. Since you're asking, I will, I'll send you the link. They come about every 6 weeks or so, yeah. In my early years, comments I made, I'm not sure what you mean. I'm sure if you followed every word I said over the last 20 years, I'm sure I'd find some stuff I regretted, I guess. I don't know. Regret's a tough word for me. I don't know. If I meant it at the time, because I thought it was, if I say something I feel was the best thing I could say in my interest and everyone's interest, I guess I wouldn't regret it, even if it turned out to be wrong. So I'm not sure. I'm not sure what you're in for here. Okay, Mike, live seminars. You can read about seminars there, but it's every 6 weeks, Mike. But again, the home study program is a full replication of the seminar. It's 110% actually. So in between, I think it's good to do those. Mike K, we have a lot of mics in here, man. Volume in general has two specific purposes, okay? And all the rest of volume, you can throw it out. And sitting there watching, no, there's no sense to do that. It's not ever going to be helpful to you. There's two purposes to volume, begin and end moves. There's the third purpose too for understanding pauses, but for the most part, a lot of volume is nice to read, but it doesn't make you any money. A lot of volume people say is just wrong. Yeah, here's the dumbest comment I should do dumbest comments ever made by commentators, because that'd be a great topic. It would be a funny presentation. One of the dumbest things I ever hear, Mike, is that a commentator that says, the market's been up for 6 months, and they say, well, I don't trust this move because it's all on light volume. Dumbest comment in the world, because number one, it's still up. You're still down X money if you're short. You're still up X money if you're long. And number two, the fact that it's on light volume actually would promote more of a move because people are reluctant to get on. So this is, a lot of people have volume backwards. Remember, everybody, for every buyer, there's a seller, right? So when you talk about the huge amount of buyers in that bar, well, there were also a huge amount of sellers in that bar, all right? There's always a seller for every buyer. The buyers in some moment were more than the sellers, move things higher, that's why they move higher, et cetera, et cetera. Yes, John, correct. Yeah, it says that in that thing that I gave. The home study program for the seminar program is for the whole seminar program, correct. There are only literally a handful of people that have taken the classes one at a time. I don't recommend that. You can. I don't recommend it because it's all one package, so you can't separate it. And I also very much encourage people, because I think it says, read on the home page, everybody. Down at the bottom, there's a thing called warning. Read the warning. Just a very honest commentary about trading and about learning to trade. And the whole debate, if you can, learn from one seminar, etc. They're designed to fit together in a way. So, I just received an email from Jim Cramer asking me to pay several $100s per year to join his investor club. Deleted. Well, actually, Chris, I understand, and I don't know. I haven't heard Jim Cramer's voice in years, but I understand that there's a reverse ETF that makes pretty good money on Jim Cramer. They invest in the opposite of what he says and is doing pretty well. So you may want to, keep that thought in mind, even though maybe you don't give your money to Jim. Okay. All right. I'm down at the bottom of the questions, comments. Anything else I can answer for any of you people? I think the next educational event will probably have to be a fun-filled, past trades, good stuff like that gets everybody excited. So we'll do one of those next time. Your 100-day plan is by far the best road to learning trade. Oh, thank you, Marinus. Yeah. 100-day plan at the 100-day plan is available for everybody to look at. It just simply is a guideline. And again, it's a rough guideline, but it's right on the top of the seminar page. Here it is. It's just kind of a way to go about learning to trade your first 100 days. So at the end of the 100 days, you could be risking a moderate amount of money. Not a lot, but a moderate amount, making some money at the end of that time. All right, looks like we finally ran out of comments. All right, everybody. Have a great evening. I'm not even sure what's coming up next. It's Wednesday. I think next week we have seminar program stuff going on, right, with PARD and a scanning night. So we'll probably see you a week from Monday for scanning again. All right. Take care, everybody. Have a good night.